Hello, thank you for joining us. My name is Dan Coatsworth from Shares Magazine. Today we are going to talk to John Bennett, Fund Manager for Henderson European Focus Trust. John, what's your outlook for Europe in 2017?
Well, it's rarely a quiet sort of place, Europe. You know, there's always a lot of noise. And I think it's going to be as noisy as ever in terms of news flow. And unfortunately, not the news flow that really matters in terms of companies' cash flow and things like that. But I think there's going to be an awful lot of news flow on the political scene. I mean, that's pretty obvious. It starts imminently, in fact, with the Italian referendum. We've got a whole bunch of elections. And so the media, as ever, will focus on the wrong stuff.
Are you nervous about any of the elections coming up over the next 12 months?
Well, I've spent 30 years or so investing in European equities, and I suppose the day that I'm not nervous about everything in Europe is you know, the day that I'm sort of finished. I think you've got to stay nervous no matter what continent or country you're investing in. You've got to stay nervous. That's the nature of this job. But yeah, I think we are nervous about these elections, but no more than usual, and a way lot less nervous than the market is.
Do you think investors should have Europe in their portfolio simply to get geographical diversification, or is it really a good place for really great companies?
I think it's both, actually. I think both. I mean, you can't ignore, how can you ignore the world's biggest trading bloc? And then to the second part of your point, you know, we don't invest in Europe. I don't invest in Europe. I invest in a bunch of companies who happen to have been born in Europe and have a stock market listing on a European exchange. The global companies.
What do you look for when you're making an investment?
Well, I've always said that you cannot make any investment in anything based on one ingredient. There's a whole bunch of ingredients. You look for recurring patterns or themes, but you could invest in a company because there's change. I mean, I do like to look for change, but not 100% of my portfolio is going to be in change, special situations. It might be the portfolio of that company. Say it's got 3 divisions, but it's going to 2. We might like that. But that's not 100% of your portfolio. Some of the stocks are actually there as components of sector themes. It may be a sector that we're buying, and we populate that sector by buying the best companies that we see to exploit that sector theme. So different companies are there for different reasons. You do look for recurring ingredients, and for me, it's if I was only asked to say you've got to have 2 ingredients: cash flow and valuation.
What's the favourite company in your portfolio at the moment?
I really don't like saying what's my favourite company is, but you usually walk into a profit warning. But if I may, and I think this will probably possibly shock and even alarm and maybe even have them running for the exits as far as my shareholders are concerned, but my favourite sector right now is financials. That's a big change. I mean, I've spent the best part of the last decade really disliking banks. I think there's a big change underway, and so my favourite investment right now is European banks, and that's, for most people, that's hold your nose or run for the exit, but I think there's a big change going on.
The dividend from your trust is approximately 2.4% at the moment. So how does that compare with, say, something like the FTSE 100? It's clearly a little bit less than people may be used to getting if they're only investing in UK equities at the moment.
Well, I think that is a real apples versus oranges there on a number of levels. First of all, it's not the FTSE 100. It's a European portfolio, and second, yield is only one part of the total return equation. I manage a total return portfolio. We don't put yield first. I mean, yield can turn out to be an optical illusion. FTSE's yielding about 4, I think. Yeah. It's a very different beast. It's a very different animal. It's got totally different companies, mining, more energy, etc. There's some optical illusion yield that kicks around. I would like growing income, and I'd pay less attention to the starting yield.
Would you say that you're a long-term investor or someone that looks for short-term opportunities to make a profit for the trust?
I think, I mean, it is a bit of both, but, you know, at heart, I'm long-term. I mean, you can, this is the constant tension for any professional money manager. It's not your own money. You can only be as patient as your clients.
So are there any parts of the market that you wouldn't touch?
No. I think one of the, if not the most dangerous word in investing is never.
Thanks very much, John.